Coming up on Market to Market, BRICS countries forced to pick sides in the global trade war. The father of wind energy takes exception to criticism. A mined product impacting the Corn Belt and the Rose Bowl. And commodity market analysis with Arlan Suderman next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors. New parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, May 2 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. An economy has a complex makeup that can be boiled down to a widget. Who makes, sells, and ships is one side, who buys is another, and the ripple goes on and on. Let's focus on the makers of items in the U.S. Employers added 177,000 jobs in April. Shifting policies on trade has created uncertainty. However, this report reveals some resilience as jobs were added in transportation and warehousing, but lost in factories. The unemployment rate remained historically low with a reading of 4.2%. That's no change on the month. The inflation gauge, the PCE, indicated growth slowed last month. The Commerce Department reported the reading on the index was flat. The core PCE, which removes food and energy prices, was even for the month and had 2.6% growth in the year-over-year reading. Now back to the widgets. Where they are made and shipped is a major discussion over the country's policy on trade and tariffs. This week, two of the biggest economies exchanged comments and left the door open to negotiations while trying to save their positions. China took their efforts to other emerging economies for positioning. Peter Tubbs reports.
This week, the Trump administration created a tariff carve-out on some auto parts to preserve auto production in plants in the United States.
And we have to keep working on affordable parts to ensure that those supply chains promote domestic growth and affordable vehicles in our country. And getting all this right between trade policy that promotes growth for the U.S. auto sector and a policy that limits U.S. production.
Ford continues to import auto parts and finished vehicles from both Mexico and Canada, and the initial Trump tariff schedule had concerned the auto industry. General Motors expects to spend up to $5 billion on tariff taxes to import parts and vehicles this year. Chinese diplomats are attempting to rally other members of the BRICS coalition to stand firm in the face of higher tariffs, calling the United States a bully that can't be trusted. But the group of emerging economies is struggling to arrive at a consensus. Many of the countries benefit from their partnerships with both the United States and China. BRICS members, which include Brazil, Russia, India, China, and South Africa, represent about half of the world's population and 40% of the world's GDP. President Trump also believes the benefits of the tariff tax plan have not hit the economy.
And now we're doing better than we've done in a long time. You know, we were losing $4 to $5 to even $6 billion a day on trade with Biden. And now we have it down to a very manageable number, and the tariffs, for the most part, haven't even kicked in yet. So that's the way. Stock markets, to me, are an indication, but the big indication is what's happening, and the people around the table know what's happening. Yes.
Tariffs are paid by the companies that are importing goods, and the costs are usually passed on to consumers. For Market to Market, I'm Peter Tubbs.
Following the request from 7 governors, the Environmental Protection Agency issued an emergency waiver clearing the way for year-round sales of E15. The policy went into effect May 1 and will run until May 20, the maximum number of days allowed under the Clean Air Act. The EPA is expected to continue renewing the waiver through September 15. Another renewable energy program was talked about differently by the president this week. Wind energy was the target, as David Miller tells us.
This week, President Trump celebrated his first 100 days in office at a rally in Michigan. The speech included praise for his energy policy, but not so much for green energy.
We've ended the radical left war on American energy. We've stopped their crusade on coal. Did you see what I did the other day? Clean, beautiful coal. I said, you're not allowed to use the word coal unless you say clean, beautiful coal. I gave it absolute, total approval. And you know what I don't give approval to? Those stupid windmills that go round and round and round.
Iowa Senator Charles Grassley, a Republican and father of the wind energy tax credit, was not concerned about any potential cuts to the policy.
I like to tell him when he talks about wind energy killing birds, there's more birds that fly into the glass towers in Washington, D.C., including his, that kill more birds than wind energy does.
Grassley believes there is a place for discussion about the wind energy tax credit in the bill that will extend Trump-era tax cuts.
We've got to reach an agreement on this tax bill that could include some modification of the wind energy tax credit. It could leave it the same, or I suppose you could be phasing it out.
Grassley negotiated a sunset to the credit in 2015, but the policy, now known as 45Y, was extended to 2033 under the Biden administration's Inflation Reduction Act. For Market to Market, I'm David Miller.
Having patience is one thing. Waiting 75 million years is another. Organic material that has built up for that long was discovered by a Utah company and found to offer improvements to soil health and nitrogen efficiency. Live Earth Products ships globally and impacts cornfields and iconic stadiums. Russell Taylor's father discovered the deposit, and now he serves as the company's vice president. Our cover story is some of the highlights from our recent MTOM podcast discussion.
I'm at our mine here in Emery, Utah. We mine and manufacture Humates. So this backdrop here is just a picture of the mine.
Humates, what's that?
So we mine a mineral deposit that is, think of it as an ancient forest floor. So 75 million years ago, what you see behind me was a tropical forest like the Amazon. And through the thousands and thousands of years, that organic matter stacked up and it is now trapped underneath the sandstone layer you see behind me. The humic shale is used in different industries, dietary supplements, cosmetics, animal feeds, and fertilizers. So it's a nice agricultural input.
How long has that mine been operational?
So my father opened the mine in the early 80s. Kind of a sad story to begin with, but it resulted from a coal mine fire that my father was in. 27 people died in that fire, and my father decided to leave the coal mine and use his mining knowledge elsewhere. They were searching the desert out here looking for tar sands, oil shales, part of the 80s Superfund money. And they found this deposit here and they said, well, it's not what we're looking for. It might make a good fertilizer or something. And the group moved on. So my father decided to place a claim and took $50, went to the state, said, I'd like to mine this property. And actually, started from ground zero. I was 9 years old at the time.
And did he, yes, it sounded like he had a little bit of experience in mining, but does everybody just have that experience there when they're around mines and mountains?
No. He had some mining knowledge, but the uses of the product for humic shale were still a little bit nascent, and so developing the industry that we're into now. I mean, we sell into multiple industries: agriculture, dietary supplements, cosmetics, animal feeds, and fertilizers. So what created this was just a lot of hard work. Take a dollar, put it on the table, make two, and do that for the last 35 years. So, I got all kinds of fun stories about driving heavy equipment as a young kid, helping my father prepare the mining supplies. You can't make this stuff up. It's the real American dream.
And do you still have an active role in it?
Yeah. So I'm vice president of the company. I do a lot of outside sales. I'm also our lead agronomist, so I do a lot of in the field work with the farmers and growers and distributors. So yeah, actively involved. I get less day-to-day handling explosives, which is a huge downside, but it's a lot of fun what we do. We're helping to improve lives, both human nutrition and soil nutrition.
Help me out here, because I don't quite get the line between a mine and an agronomist and why that's needed. I mean, you've said what products come out of that, so I can kind of draw the line, but I need you to do that for me, Russell.
Yeah, so let's connect the dots here. Humates is the end result of decomposition. So when you put compost or manure or those kind of things on the ground, through microbial degradation, you take those active organic matter and you turn them into stable organic matter, which ends up being humic acid, fulvic acid, and humin. Those components of your stable organic matter contribute to things like water conservation, nutrient retention, improving soil texture and structure. So by applying that with your fertilizers, farmers are able to improve their fields and improve their nutrient utilization. So it's kind of a way of speeding up the process. Instead of putting compost or manure down, you're putting something that is already degraded and fully ready to build and contribute to that soil vitality.
As an agronomist then, what are the farmers growing, and how close are they to where you're at?
So we ship products internationally. So our products are used in Japan, Malaysia, South Africa, Poland. The neat thing about the products we mine is they contribute to your soil organic matter. So anywhere where you've got low soil organic matter, you can use these products. They're used by cannabis growers. They're used by turf growers. Live Earth Products has been a proud corporate partner with the Rose Bowl Stadium since 2006. So it's not just, one crop. There are plenty of people that are growing corn that use our humic acid, and there's definitely an application for it. But yeah, anything with roots is where our products will be used and used well.
You're going to have to help me on the definitions, because is your product considered then a natural product?
Yes. So certified organic, it's just old plant material. What these organic products are is just fully degraded, ancient plant material that has gone down to a very stable sequestered carbon, which they call humic and fulvic acid. So yes, natural, certified organic. And what's in there is actually three components. You have the organic acids, you have a little bit of occurring natural acidity, and then also the trace minerals. So a lot of times we're isolating the minerals for certain applications, and sometimes we're just selling the organic acids. Typically, those are used in nutrient stabilization and soil aggregate formation.
The full MTOM is available now.
Next, the market-to-market report.
Weather seems to be the only constant moving the market. For the week, the nearby wheat contract fell 2 cents and the July corn contract sold off 17 cents. Bean oil's influence ran out of favor in the soy complex as the U.S. still appears to be China's source of last resort. The July soybean contract shed a penny, while July meal dropped $1.60 per ton. July cotton shrank 44 cents per hundredweight. Over in the dairy parlor, June Class 3 milk futures gained 77 cents. The livestock market was mixed. June cattle added $2.85, August feeders put on $2.60, and the June lean hog contract decreased to $1.80. In the currency markets, the U.S. dollar index expanded by 44 ticks. June crude oil weakened, $4.74 per barrel. COMEX gold dropped $68.90 per ounce. And the Goldman Sachs Commodity Index declined by almost 15 points to settle at 521.40. Joining us now is regular market analyst Arlan Suderman. Hello, Arlan.
Good to be back with you.
So let's start with wheat like we do. There's been a frequent saying lately in the wheat market, new contract low, it keeps going. When is that record going to stop playing?
Yeah, end users are letting the market come to them, and that's working for them at this point. It stops when they have a reason to change their strategy. The funds have been making money shorting the wheat market. That stops when we have a reason to. There's plenty of reasons that could emerge. We're still on the dry side in Russia. We got past a close call with a freeze this past week. That could have been a significant story. They still have the dryness risks there, but really the Black Sea sets the price. So what's the size of the Russian crop going to be? Is it going to be another small one? I see world stocks continuing to shrink this next year, particularly among the major exporters, but that doesn't matter until it matters, and when it matters is when the cash market in the Black Sea starts rising.
Domestically, though, let's look at Oklahoma. You can't take much more rain than they've had in the last 2 weeks. It's not seeming to do anything to the market either. Why?
Yeah, one of our customers got 15 inches of rain in the last 10 days, and they got more rain coming. They went from drought to floods in a hurry, and that's not good either. Does the market care? I think that may be actually part of the supporting factors to close out the week a little bit in the market, but overall, rain makes grain until it doesn't, and that's what the market's going to assume.
In corn, the old crop still seems to be in demand. It's had a pretty good run. How much more of a run does old crop have here?
Well, I think as we get into June, then old crop starts becoming a focus on new crop, because it's obvious we're going to have enough to get to the end of the year. My ending stocks estimate is now below 1.4 billion bushels, a little bit below that, but that's still enough to get us to the end of the year. So as we get into June, the focus becomes new crop, and that becomes the weather story. And we've got a lot of climatologists out there saying we're going to have problems with hot, dry conditions in central and western Midwest. Some disagree. Which way will it go? I'm watching the sea surface temperatures in the Gulf of Alaska. That's the strongest correlation that we have. If they're cool, then we tend to be hot and dry in the Midwest. If they're warm, we tend to be mild and wet. Right now they're warm, but that's not a good indicator now what they'll be in June. So what happens in June and July is what makes a difference. And with the dry subsoils, even though we've had some rains lately, we are vulnerable. And now that May is starting to dry out in the forecast-wise, if that dryness holds, it won't take long to flip the switch back over to hot, dry.
So is that a little bit of indication there's a potential for some weather? Is that what you're trying to tell me?
Yeah,
I think a tiny bit there.
I think very much so. I thought coming into this year we had probably 2 chances of a weather rally for farmers to sell. The first would be the potential for planting delays. We thought we were going to get that, and then the forecast flipped in late April, became more favorable for planting. But now does that favorable planting weather become a dry story? That'll be the potential next story.
Okay, so we talked a little bit about old crop and the new crop in the ground, but let's talk about demand, if we could, for a moment on corn. Who wants U.S. corn?
Mexico. And the U.S. livestock industry is doing well. We're feeding cattle and hogs to heavier carcass weights all the time. We're leaving them on feed longer. Ethanol demand is good. So domestic demand is solid. Export, we need to raise the export target. I think we'll see that here in the May crop report on the 12th. Probably another 50 to 100 million bushels. One reason I think we'll do it now is I think USDA will want to solve for a new crop ending stocks estimate below 2 billion. And raising exports to lower the old crop ending stocks will help them get there.
What's the story you feel is the biggest one in the soybean complex right now?
Biofuels. When are we going to get the biomass diesel production mandate from EPA? It's at 3.35 billion gallons right now. The industry's asked for 5.25 billion gallons. If they follow their old formula, they would come out with 4.25 billion, which would be a big increase. But we're hearing things out of the Trump administration indicate that he really wants to help the industry. And with the trade war, this is one way he can do it, is support biofuels. We even heard it at the cabinet meeting this past week. Secretary Rollins of USDA brought up biofuels. So we're anticipating maybe 4.75, maybe closer to 5 billion gallons. If it's above 5 billion gallons, that's really big. So I think that's the biggest thing. And then permanent E15. And I think that's eventually coming.
But let's go back to crude oil, though, for a minute. We finished below $60. That's a major mark in this. What does that do to this discussion?
What we're doing is we're shifting crude oil market share from the United States back to OPEC. We had been stealing market share from them. Our cost of production is higher than theirs. The shale oil fields are $60 to $62 break even, so we are shutting down production. And then that shifts to OPEC, which is increasing output this month.
All right, let's take a question here if we could. I want Jim in North Iowa to ask you this question, Arlan. World demand for grain and oil seeds hasn't changed. Why can't we find markets other than China for our goods?
Yeah, I've been saying we need to look elsewhere from China for years because currency exchange rates, it's cheaper for China to go elsewhere. And when Brazil's currency collapsed, broke, whatever you want to say, 15 years ago or so, 14 years ago, that's when they really started expanding production and started expanding sales. So if they have corn and soybeans to produce, they're going to be cheaper. But anyway, Mexico is our number one customer. If not number one, they're number two, depending on the product. Probably our top 10 commodities, most of those commodities are going to be one or number two. Mexico is a huge customer, and I think they're going to continue to be. But we need to be looking elsewhere while also developing the domestic demand.
All right, we did get a question also. I'm not going to have you put it up on the graphic, but just about your carryout. You mentioned the carryout for corn. What's your 24, 25 carryout for beans then?
It's just below 340 million bushels, around 335, 340 million bushels. I forget the exact number, but it's right in there, 338 or something like that.
All right, so Soybean Trader didn't think I'd ask you that question, but I did. Let's go to livestock because the cash and the futures have been a major story. For sure this week. Cash continues to be king, causing problems for futures. There's stories out there starting to form, Arlan, about cattle and the packer being possibly short. Do you buy into that?
Well, when you look at the fact that they're slowing down the slaughter schedule, the week before last we had 555,000 head harvested. That was the slowest non-holiday week in many years. And then a similar week this past week of slaughter, and yet they're having to pay up for the cattle. And yes, the feeder is putting more weight on because it's economical to do so, and that's giving us the beef. But the packers are having to pay up even though they're slowing the chain speed down. And that's an indication of the slowness. Now, our last reports are starting to show the beginning signs of rebuilding the breeding herd.
So holding back some.
Holding back some heifers. It's the very early signs of it, but we're seeing the early evidence of what we've been expecting the last half of this year of the numbers not being there. Now, ironically, beef supplies are as high as they've ever been because of the big carcass weights and because of the record imports. But still, paying up for those cattle to keep that thing flowing is really pushing those prices higher. Another $5 to $9 higher this past week.
Do you see any change, correlation between cash and futures anytime soon?
The question is, and the board is skeptical now, how long we can sustain this strong strength in the cash. It's going to come down to consumer. But what they buy from us this week is going to take a little while to get to the consumer, and then we'll get a gauge what the consumer is going to do. Now, consumer sentiment has been very poor over the last couple of months. Really, for the last quarter, it's been very poor. But yet they've still been paying up for those steaks. When you look at where choice cuts are at right now, it's really impressive that the consumer has been paying up for that. How long will that go? And a lot of that's going to go back to where does this trade war go? Because the consumer says, I'm okay now, but I'm worried about the future. If you take away the worries about the future, then the cattle industry may be okay. If you don't, the cattle industry may have problems.
What about the hog industry in that same scenario?
You know, the hog industry, losing China as a customer, was banking on getting the value chain decline from beef customers coming down to pork, and that hasn't happened as much as they expected. So demand has been a little bit softer than what they anticipated. We're still up there around $100. But we need to see a little stronger demand to replace that lost China business.
All right, Arlan. Thank you as always. Appreciate your time.
You bet.
All right, Arlan Suderman. We're going to pause our analysis, continue our discussion about these markets in our Market Plus segment. You can find both analysis and plus on our website of markettomarket.com. Join our YouTube family to keep up on all of our video offerings, from stories, shows, and special videos. Subscribe at youtube.com/market-to-market. Next week, a look at an operation growing their own grains and markets. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors. New parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.